Hi everyone, my name's Tony. Are you puzzled by student finance? Haven't got a clue where to start? Well, in this video, hopefully we'll address all those issues. We're going to look at eligibility, we're going to look at the loan breakdown, we're going to look at the amounts that you're likely to get, how to pay it back and when to pay it back, and also how to apply. So first things first, before you apply, you need to actually see if you're eligible. Currently, you are eligible if you're a UK national, if you have indefinite right to remain as a status, or also if you have settled status. If you don't have one of those things, then you still may be eligible. If you've lived in the country for over 3 years, you can apply for something called pre-settled status, and then that will allow you to apply. Please be aware though, sometimes it may only apply to your actual tuition fee. Also, if you're an asylum seeker or a refugee, you may be eligible. I will leave some details in the About section. Now we'll look at the breakdown of the loan. This is broken down into two areas really, the tuition fee and your maintenance loan. The tuition fee will go directly to the university. So when you actually enroll, behind the scenes, student finance will send that money to the university that you're going to. The amount varies from year to year. Currently it's £9,250. That is set yearly by the government, and that is the maximum that a university can charge. You will find that 99.9% of all universities will charge that amount. So that goes straight to the university. You never ever get to see that. The money that you do get to see is called your maintenance loan, and that is there to cover things like your rent, your general living costs, your books, your travel, your socialising, everything like that. So that's what your maintenance loan will cover, and the amount you get will vary, and we'll look at that in the next part of the video. So how much you get actually depends upon a couple of factors. The first one being the geography of where you're actually going to study. If you're going to stay at home, or if you're going to move out of home, and also if you live in London or not. So first thing is the geography. The second thing is how much your household income is, and we'll break down those details in the next section. This is for the academic year 21 to 22. If you decide to stay at home, you can get 7,987. So that's you're living with your mum and dad or your guardian, you'll still be able to get that money. If you're living away from London, but not at home, you'll be able to get 9,488. So for example, your mum and dad may live 2 miles away from the university, and you've decided to go and stay at halls of residence. Even though you're very close to where your parents are, because you're not actually living at home, you'll still be entitled to that amount of money. If you're living away from home and you have gone to a university in London, you're entitled to over £12,000. The reason for that is because it's so expensive to live in London, and that's been taken account for in that figure. Also, if part of your course means that you have to go abroad for a year, you'll be able to get up to £10,866. So how much will you actually get? That depends very much on these figures here. That will depend upon your household income, and we'll go into a bit more depth of those now. In a nutshell, the more income that your household has, the less amount of loan that will be available to you. So for example here, if your household income is 25,000 and under, you will be eligible for almost £8,000 if you're staying at home. If you're living away from home, you'd be able to get 9,488, and in London 12,382. And this goes up incrementally. So somebody whose income is 55,000, you can see how this drops to 3,950. That's if you're at home. If you're not at home but you're living somewhere else, that will drop to 5,412. And so this will go up to £70,000. If your household income is that amount, those are the rates that you'll get. And as you can see, there's quite a discrepancy between somebody earning this amount of money and somebody earning that amount of money. So we just saw there's quite a discrepancy between the amount of loan that you can get depending upon your household income. If you are in the lower bracket in terms of the loan that you'll get, i.e. if your parents are earning £60,000, you'll come out with £4,733 of maintenance loan. You could be living next door to somebody who's got far more than that. The thing is, when you find out what your loan is, please let your parents know, because this loan has been calculated upon your household income. And unless you tell your parents, look, mum, dad, your guardian, whoever, there's the top whack I should be getting. I'm getting a reduced rate because of your income. Therefore, please, can you make up that money for me? So it's very important that you don't think that's all I'm going to get. I'm going to really struggle on that. Please talk to your mum and dad. They don't get a letter or anything like that saying this is the amount that your child is going to receive. We expect you to make it up. They're never informed of that. So it's very important that you have that conversation with them. We're going to talk about paying back the loan now. And please do not think for 1 second that you're going to be saddled with a huge debt over your head. When you apply for the loan, it doesn't go on your credit score or anything like that. And just see it as a way of sort of reimbursing the government for the money that they've invested in you to go to university, to get a good education, and hopefully to get a good job. So we're going to go through the figures now, and you'll see it's not half as scary as you may think. And we'll also look at a couple of comparisons of different amounts of loan. It's well worth pointing out as well that with your maintenance loan, you may have to actually top that up yourself if you find that you're struggling. A great thing is to get a job maybe within the university itself. They often employ ambassadors. You can get a job in a bar or a job in a shop. But if you do that, please be aware that if you're working in a bar and you're coming home at 3-4 in the morning and you've got a lecture the next day, something's going to give somewhere. Similarly, if you're working in a shop, make sure that you are aware of the rota, and if you have to go in on a Thursday afternoon and you've got a lecture that day, you obviously need to make sure that you prioritise your university work. Okay, and now we'll look at the actual figures and how to repay. Currently, there's a threshold that's set by the government that says if you earn over an X amount, that's when you start paying back your loan. Currently, that threshold is at £27,295 per year. So that's what you need to be earning. And anything over that, you will pay 9% interest on. So let's say you get a job and you earn £26,000 per year. You'll be paying back absolutely nothing because you're not over that threshold. Okay, you get a job and you earn £28,295 per year, and you'll pay 9% on the amount over the threshold, which is £1,000. So 27,295 is the threshold. You're on 28,295. That's £1,000 that you're over the threshold, and you'll be paying 9% on that £1,000. So 9% of £1,000, that's only £90 a year, and that's £7.50 a month. If you consider you'll be earning over £2,300 a month after tax and national insurance, that'll be approximately £1,600. And that £7.50 is absolutely nothing. So in this instance, we've got somebody who's graduated with a loan of £30,000. Now, looking at the salary from the previous slides, that was £1,000 over the threshold, and therefore they pay back £7.50 per month. Over a year, that's £90 a year. Times 30 years, that's £2,700. Why 30 years? Because after 30 years, the government will just wipe the loan completely. Okay, so that's what somebody pays if they've borrowed £30,000. If we look at a graduate with a loan of £60,000 on the same salary, they'll be paying back exactly the same. Because they're only £1,000 over the threshold with their salary, they'll pay back £7.50 a month, 12 months, £90 a year, 30 years, £2,700. So it's exactly the same. So the amount you borrow won't affect how much you actually pay back. Okay, the only thing that will affect how much you pay back is how much over that threshold you actually are. In terms of other sources of money, there are something called bursaries and scholarships that may be available to you, and these come in all sorts of shapes and sizes. So it's important that you look at the university's websites and have a look at what things may be available to you. And the great thing is these don't have to be paid back at all. They can be based upon your academic prowess. They could be based on your postcode. They could be based on if any of your parents have gone to university before. There's a whole range of things out there. So please check the university websites to see if there's any financial assistance available to you. So I hope that's reassured you that the financial burden on you isn't half as bad as you ever thought it would be. So all these people going, I can't go to university, I'm going to be saddled with debt. It's just not true at all. And as I say, please don't see it as a huge debt. But of course, you can't actually apply for your loan until you apply to Student Finance England. And I'm just going to jump on their website now and show you how easy it is. And if I can do it, I'm sure you can. Simply go to Google, put in student finance, and you'll come up with the government's website. Simply go into the government's website, and here you go, student finance login. It's very straightforward. There's some useful things along the right hand side, seeing if you're eligible, finding out how much you get. Importantly, seeing if you can get any extra money, and that will be for things like if you've got children of your own or if you're disabled. There's tips on there on preparing your application and how to actually apply. It's very important as well that you update your details if any circumstances change, and also you need to have your bank details on hand so that the government can put that money into your account. This whole site opens in early March, so the sooner you sort of get the ball rolling, the better for you. So just click the start now. It'll just ask for your personal details. You'll have to register an account, and when you do that, when it does actually open, the date will be sent to you and you'll be able to log all your details and get straight to it. Well, I hope some of that made sense to you. If you've got any comments, just leave them in the comment box below, and just please hit like if you found this informative, and hopefully we'll see you soon.